So, hello again. Here we go again with our weekly Moneylogy show, and me and Vala are here today with you to share our thoughts, our experience about reaching a financial freedom. And just a reminder that we have a mission to help people to achieve financial freedom through business or investing while living a harmonious life. And this is why we do this show also for those who are interested in the topics like personal finance, investing, entrepreneurship. So if these topics are important for you, watch our show, and also you can find all the previous shows in the channels like YouTube, Instagram, or Facebook. So Havala.
Hi, good day.
The topic today we would like to discuss is about how much you can buy. What does it mean actually? What is the purchasing power of you personally, or maybe of the money which you have, you earn, and actually what does it mean in general, this purchasing power, and why the purchasing power can be also going higher or also can be going lower, and what actually influences this trends of going higher or lower. So, Vala, what are your thoughts about the purchasing power? What does it mean for people in general, and why it is so important also to understand that the currency has its own purchasing power as well?
Yeah, I mean, I would say briefly that purchasing power means that how many goods and services you can buy for a certain amount of, euros or dollars, and how does it sustain, over the time? Because if you can buy less products and services for the dollars and euros you have, then that's not good for your money, and you always want to keep the value of your currency as much as possible. So that's the big issue is definitely the printing of the currency, and the amount how much we print, because it's quite contradictory, because as a private person we all would like the purchasing power to stay or increase, but the governments are actually doing the opposite. Their goal is to actually decrease the purchasing power, which is actually inflation, and central banks have even a goal set at 2%, that the purchasing power has to go down each year at least 2%.
Exactly, yeah. That's why, like Val already defined, the purchasing power is the amount of goods and services which you can buy for a defined amount of money. So it means that basically 100 euros now, and let's say 100 euros in the past, or 100 euros in the future, will be able to buy a different amount of goods or services you would like to have. And like Val already also mentioned, that basically the goal of governments in general in the world is actually to have small and controlled percent of inflation, but not deflation. And there are two ways how purchasing power can be changed. So deflation means that basically the purchasing power of a currency is becoming bigger or stronger. So it means that you can buy for €1 more goods. And inflation actually means, from one point of view, people say that inflation is like an inflating of prices. But from the other point of view, basically it means that money, or more accurately said, currency which we use, actually losing the purchasing power which we have. So if you look even to, let's say, euros or dollars, and compare the amount of goods you would be able to buy, let's say, 10 or 20 years ago, and now you will see that the amount is totally different. And of course, you can say that, let's say, the piece of bread now costs more euros, but from the other point of view, it means that just for the same amount of euro, you can buy less bread. So why it is important actually to understand it also from the perspective of preserving the purchasing power of your own wealth, and what people should do in order basically to control these changes in the purchasing power. What are your thoughts about it?
Yeah, I think over the history, there's has been different stores of value, and I think that's what everybody should do, is that we put our time and energy to gain a certain amount of currency, and if we just hold it and do nothing with it, then certainly you can say that in the next years the purchasing power will be less. So now the question is that, okay, what can I do to preserve the value, and what are the different stores of value where I can keep it? So for example, you can gold and silver has been store of value over the hundreds and thousands of years. Real estate probably is a store of value. lately there have been discussions about whether Bitcoin is a store of value. So there's other asset classes or other assets that are more likely to preserve the value than a currency.
Yeah. So basically, simply speaking, what does it mean? That the goal for actually probably each person is to find a ways how he can employ his money in order to earn more than the rate of inflation. So let's say if inflation is, like Vala already said, the goal, which at least in Europe is aiming for, is 2 to 2.5% a year. But basically, let's say the real inflation usually is much higher than the one which is officially announced, because if you see how inflation is calculated, then they take a certain amount of goods and services to the so-called basket in order to calculate the changes in prices. But it doesn't mean that it can be any changes in another services which is not included in the basket. And actually, this is why the real inflation can be at least double times higher. So let's say if the goal is 2.5%, the real inflation probably will be something around 5%. And your goal is to somehow employ your money investing into different asset classes in order to earn more than 5%. Because if you earn less, it means that you just maybe stopped a bit this reducing of purchasing power, but still you will be able to buy less in the future. If you earned at least 5%, then it means basically that your money purchasing power stayed on the same level, because you lost 5% of purchasing power and basically you earned back 5%. But if you earn 10% or 15% and the inflation is 5%, then it means that even in this situation, your purchasing power goes higher, because in a way you have more money to buy something. So what would
and it can even go trickier if you're buying assets from different markets. So for example, last year 2020 was a great example, because if you bought some assets in US dollars, then also the value of the dollar went down. So basically, if the value of the dollar went down like 12%, it means that you actually have to beat inflation plus 12% to be even profitable. So it can be really tricky sometimes to actually grow your value of your assets.
Yeah, I totally agree, because in a way it can be even said that there is an internal and outside or external inflation, because one is then just the dollar losing purchasing power inside the country. But at the same time, like you said, the dollar can lose its value comparing to euros, or maybe comparing to rubles or other kind of currency. And then it means that basically you need also to earn more this difference.
Yeah, and I think we're in really, interesting economic situation where, governments or central banks are printing so much money, and 2020, the total money supply or currency supply increased 40% in just 1 year. So imagine if there are like basically, millions and millions of more dollars chasing the same amount of goods and services. It can only result in the prices going up over the time. Okay, it hasn't happened yet because of different reasons of the crisis, but it's really pre-inflationary environment where it should influence all the prices going up, which means that if you just hold the currency, you can just buy less. You can buy less goods over the time.
I would say actually that we even have already experiencing this increasing in price, but just like I said a few minutes ago, that because maybe this increase is not yet in the goods or services which are included in the basket calculating the inflation, we don't see it like in the economical indicators. But there are already some services which probably everyone would agree that the price went higher, or let's say some goods which also now is more expensive than, let's say, a year ago. And I totally agree that definitely we will see probably in near future inflation in more different areas as well. And the question is only when. And this is actually the question which I quite often receive in different seminars or show, where I do. People always say, "So when we will see the inflation?" What would you say? What do you would answer to this question?
I would say you already see the inflation, but you see the inflation in the prices of the asset classes, because I think the situation we have right now, it's also called everything bubble, which means that it has to go somewhere, and it goes to different asset classes, and all the asset classes are basically, historically high, and at the same time, the European and US Federal Reserve are printing trillions of dollars. So it doesn't make any sense that, economy is like booming, and then at the same time, governments have to support the economy by printing even more money. So it's really, right now, it's only in the asset prices, but soon I think it will be also in prices of our daily stuff.
Exactly, I totally agree. And this is probably the first time in the history of mankind when this is happening, the situation which you mentioned. My answer to this question actually is that it's not so important when we will see this inflation. Do we see it now, or we will see it in a year or 2 years? The question is basically what we do now in order to be prepared for both scenarios, that inflation will be maybe in the future, or that inflation will be now. And actually the solution for this is already the thing we talked in this show. You need to find a ways to employ your money in order to save purchasing power or to increase the purchasing power, investing and earning more than the possible amount of inflation which is going to happen.
Yeah, and there are different options, of course, but I think probably real estate is one of the best ones, because you can store the value, and you can probably also increase the value if you're doing the right investments.
Yeah, and also you can get the cash flow from the real estate.
Exactly. While, let's say, gold and silver, you just store the value, but you don't get the cash flow. So but this is already kind of the financial education that everybody needs to, understand which asset classes is the best choice for them to protect themselves against inflation.
Yeah, that's why, again, we get back to the first step, which is always the same. It's just do something in order to increase your level of financial education. And it means basically learn in the beginning, in order not only to get some knowledge and strategies, but more importantly, even to get understanding which asset classes are good for you. Because depending on your character, depending on your goal, there can be different choices for it. And this is up to you just to choose the ones which are important for you. And actually it starts with from the building your, we call it freedom plan, which is basically includes the steps and the asset classes which you are going to use in order to invest your money, to create the passive income, or to just invest in order to protect the wealth you have, just holding in another different form, not the currency. And by the way, for those who watch our show, I just want to remind that you always are welcome to ask questions and give also suggestions for upcoming shows. You can do it in the comments below the video. Doesn't matter where you look at, in Facebook or YouTube, and we will be more than happy to answer these questions in the current show if you ask them live, or in the upcoming shows in the future. And also we will definitely pay attention to your suggestions for the topics which are important for you in order to include them in the upcoming show. So just feel free, comment below the video, give us your feedback, give us your questions, and we will be more than happy to help you. So any more thoughts about the purchasing power from your side?
Yeah, I think it's really valid topic, especially at this time of the global economy. I think we will see probably pretty high inflation coming up. So it's better to get prepared and understand what are the ways to protect yourselves, and where should you transfer your currency to hold the value. So there are different ways you can do that. And if you look at like a year or two ahead, probably the printing will continue, and inflation will have to rise. So if we are not smart with our money, then we can just lose the value, and it's really unfortunate for most of the people.
Exactly, and I would add it to this point just that if you feel that you already understand that you need to do some steps in order to increase the purchasing power of your money, to invest them somewhere, the next step for you is just not to trust the advices you get from the consultants or other people, but to get your own understanding and your own decisions where you want to invest this money. Because it's quite also dangerous just to trust the advice from somebody who says you need to invest in order not to lose your purchasing power of your money, and I can help you. because it's risky to do it on your own. You need to basically trust me, you need to trust your money to me, and I will help you to invest these things in order to get a return on investment. This basically means that you also give the control of risk to this person. And if he doesn't succeed, then he won't be the one who will be guilty for this, because you made this decision and responsibility is on your side. So better to do it differently in order to make it a proper way. You can dig deeper to different asset classes to increase your financial literacy level, what we already mentioned with follow, and then make the decisions on your own where it would be better to invest to you, and then basically come to the strategies which would be useful for you.
Yeah, and I think also when you're kind of transferring your existing currency to certain asset class and the prices start to go up, then you shouldn't even look so much how much is the price increasing, but how much is the value of the currency decreasing, because probably real estate, gold and silver are just holding the value. And if the price is going up, it means the purchasing power of euro or dollar is actually going down, and that's what you're looking for.
Exactly. So I hope that you got now the picture and the bigger understanding about the purchasing power and the inflation, which is basically means that it's not the prices rising, but the purchasing power of the currency is going down. And everyone needs to do something in order to preserve the purchasing power of the money we have and the wealth we build. And we basically hope that you will start doing these steps or already doing, and our show will also be useful for you in the future. So one more time, if you want to watch the recordings of the previous shows, go to follow us on YouTube, Instagram, or Facebook, Starfish Academy. Also, you can share these shows with your friends and comment below the shows your questions and suggestions for upcoming shows, where we will include answers or also the topics which we will get from you. So thank you for your time one more time, and Val also you as well. And let's meet in the next show at the same time, same day, just next week. See you.
See you next week. Bye bye.
Bye.